So look, if the objective is to reduce the amount of sugar in your soft drinks, the majority of the sugar that's grown in the farms in KZN and Mpumalanga goes to the beverage industry. So if Coke can then reduce the amount of sugar there to avoid being taxed, the sugar guys will be in trouble. That's your sugar farm workers, the sugar mills to process it, the transport to move it along, the packaging and so on. So we've already lost about 25,000 jobs in 2000. A lot of that's with the global price, but also there's been a huge flood of cheap Brazilian subsidized imports coming to the country. And our fear is that you might end up seeing another 15,000 jobs be lost in the sugar sector. So that's kind of our one fear, and of course in the beverage industry as well. And it's always difficult because everybody's got different stats. But stats we've seen is ranging between 5 to 9 to 70 to 24,000 jobs in the beverage industry. And yeah, look, if you look at every sector of the economy, we're bleeding jobs all over the show. So that's really our kind of our alarm bells. Not to collapse government's health objectives, which is correct, you know.
Yes. And practically, what kind of financial implications will this have on society as a whole? How is it going to be implemented? Will it work like your VAT tax, or how will it exactly work?
Yeah. No, look, so if you are still desperate for your 8 grams of sugar in your Coke, and let's say Coke still entertains your addiction to overconsumption of sugar, and so you go buy a can with more than that 4 grams of sugar in March next year, then there would be a 10% tax on it. Look, the beverage industry can, if it want, avoid the tax simply by reformulating. Then there will be no tax for them because then they will be below the tax threshold. The tax only kicks in if you're above that 4 grams of sugar in the can.
Oh,
so if the beverage industry wants to avoid being taxed, then they just simply have to go below it. So the kind of government is trying to use a bit of a carrot and a stick approach. That you'll pay less if you avoid this type of product. And industry, if you want to avoid the tax, then reformulate. Yeah, and our issue just really has been how you kind of phase it and how you implement it and so on.
Speaking of implementation, how far along are the preparations for it, and when can we expect it to be implemented? Yeah,
look, originally the tax was a bit higher. It was originally at 20%. I think after we in industry raised concerns about the impact upon jobs, given the economic climate, they reduced from 20% tax to 10%. They also removed the 100% natural fruit juice, because we were worried about that, because most of the fruit industry in the Western Cape and Limpopo, about 60% is geared towards your liquid fruit, your fruit juices.
Yes.
If you can tamper with the fruit industry in the Western Cape, then you will lose entire provincial towns. Same thing in Limpopo, because agriculture is the backbone of the rural economy. So they removed that for the time being, and they've agreed that if they introduce it in the future, or they tweak the tax above inflation levels, that come to NEDLAC and engage with COSATU and industry. We've had negotiations at NEDLAC and in Parliament, since basically February, March. We have quite a few. There's been about 4 rounds of hearings at Parliament.
This year?
Yeah. This is the first time there's ever been engagements on a tax. Government never negotiates tax. Whether Parliament or NEDLAC, they always tell us, go jump. We're not negotiating tax. This is the first time we managed to force them to negotiate a tax in Parliament at NEDLAC. We've managed to force a task team on it. And there's purely at COSATU's kind of instance. So yeah, so besides the reducing it from 20% to 10% and removing the fruit juice and so on, they've also delayed its implementation. It should have already come into effect in April this year with the start of the tax year. They delayed it to probably March next year. We've negotiated a jobs plan for the sugar industry side, because obviously if you reduce demand for sugar, it hits the sugar farms, because there's no sugar zero or diet sugar. Yeah, so they need to do something. So our plan basically, and the key parts of it as well, we must increase the import tariffs. So those flood of imports coming from Brazil and elsewhere, and try to reduce them so that you protect local demand for local producers. To give an extent of how bad it is, we produce about 600,000 tons of sugar locally. The flood of imports has gone from about 50,000 to 600,000 tons, so basically equal to our level of production in a very short space of time. We've also said we must look at ways to increase exports to other African countries. We've also going to do there's going to be a task team set up at NEDLAC and government, with the Economic Development Department kind of providing the logistical support. There's going to be an audit of all of government and the private industry sector, sorry, just to check all the sugar that they produce, whether it's at prisons or schools or hospitals or hotels, is it locally produced? If it's not, it must be locally produced, as a way of kind of keeping local demand for local products. Other stuff we're looking at is support for small farmers, because you've got about 20,000 small African emerging farmers in KZN and Mpumalanga. A lot of them are women, and they wouldn't have the capital to withstand a knock. So how to give support? Maybe it's about support for insurance from drought or crop disease. So a bunch of things. And the other kind of major thing is to look at a long-term sustainable market for sugar, which is your biofuels and ethanol. That's been a bit of a difficult thing because of the drop in oil prices, so it become less profitable. But there's space to engage. And to give an example, already in about 9 sugar plantations in KZN, they're using the sugar cane, the actual cane and the leaves, to produce electricity. Oh. So there is space to be creative. So that's the sugar side. That's kind of largely an agreement between government, industry and us. The remaining aspect was just still engaging on, is it on the beverage side? Government is saying they want the tax in March. Beverage industry is saying, look, they can be ready by 2020. They need 3 years to reformulate, change, etc. We've come with an alternative proposal to government industry, and we're still engaging with them, but we're hopeful that say, look, rather phase in the tax. So instead of going from 8 grams to 4 grams in March next year, can't you rather go to maybe 6.5 grams in March, 5 grams in October, then 4 grams the following March, to give government its reformulation objectives for the health reasons, but give industry a little bit of time to prepare. Because the industry is saying, look, they feel that if they go to the tax in a big bang in March, they won't have space to reposition themselves, and that'll cost jobs. They can't manage the tax and keep the jobs at the same time. They've also said they're willing to put on the table creating additional jobs if they can be given a bit of a space through phasing in. Because currently your Coca-Cola bottles, the plastic bottles, is not made locally. It's imports, the bottle, the actual bottle. The wraparound label on the bottle also is an import, and even the phosphate in the drink. So they're willing to localize those 3 aspects. So basically the entire production stream, if they can be given a bit of time. We've also kind of squeezed them to say, look, currently 85% of the sugar that the local beverage industry uses is locally made, right? So we asked them to push that to 100%, because we're all in the same boat together. Even if it's not as profitable for them, but they must make some sacrifice. So we're hopeful that, between the industry and government, and also I think we've received good support from the ANC MPs in Parliament, that we can find a kind of a compromise in the next week or so, I think. Looking, to be honest with you, even without the tax, the sugar industry was in a crisis because of the imports. So this is really an ideal time for us to intervene in, to avoid another chicken industry type collapse and say, how do we save jobs? There is a bit of a trust deficit between government and industry, hence government does want a tax. Industry also wants to see government put money where its mouth is in terms of support for industry, for tariffs or for exports or electricity or whatever. And of course from our side it's the issue that about no job losses. So if government assists, then industry must commit there will be no job losses, and in fact we can create jobs as well. So, but it's a little bit of it's taken a bit of time, but we're hopeful that we're almost there. We can find each other. The health guys might not be so thrilled because they want the tax immediately. They already have said that the tax has excluded juice. It's gone from 20% to 10%. But we think, look, when it's not too much of a train smash to wait for an extra year just to phase it in a little bit slowly. And, because look, you also, I think the last thing is, you don't want to criminalize farm work on a sugar farm. Even sugar agree is bad for you, but why are we punishing that sugar farm worker? And if it takes a worker about 2 years to find another job, so must we treat them like they're selling cocaine or drugs or something, we agree sugar's not good for you, but let's just have a humane phasing in approach to it. And I think the other thing is that government also, afterwards, they will start looking at other aspects of our diet, because we think we take too much salt, too much carbohydrates. So this is the first step. But I think it's just for government to bring all of us with it, not to run too far ahead of us that we don't catch up.